Hello everybody. So I wanted to make a really quick update on HIMSS today. The conference call is going on right now. Unfortunately, I'm so busy today and I don't have time to listen to it, which means that my full in-depth analysis of HIMSS 2022 year and what HIMSS has in store for us going forward, that will be tomorrow. I will post it tomorrow. I just want to make a quick video about their earnings slides and about my reaction. We could have not gotten a better report from HIMSS, I believe, as shareholders. And the reason why I say that is because the stock is only up 9% in after hours, only up 9%. And I believe the reason for that is because they've sandbagged this guidance. And I'm very curious to listen to the call and to see the analysts really press Andrew Dudum on that, because they have sandbagged this guidance like crazy for 2023. And I believe that is the main reason why the stock is only up 9%. And because of that, that means that we probably still get to buy the stock for cheap. Well, I get to. No investment advice. But let me just really quickly show you some of the things that I've noticed about this company and about some of the slides that I think interesting. That's it. First of all, they crossed 1 million subscribers. 1 million people, recurring payments every month for 1 million people on all of these products, right? They've crossed 527 million of revenue for year 2022. And even though they are not profitable yet on a gap on an adjusted EBITDA margin and on a gap basis. Obviously, we'll see that in Q4 they have just broken profitability, as I'll show in Q4, not for full 2020, but in Q4. So the market really should start liking this company. What I love is you can see here all of the products that they plan to expand to, and you can see that even though they've tackled more niche markets to begin with, they're now tackling really big markets, right? Menopause, testosterone. You go to the US in strip malls and you see things like low T stores. They're gonna go after so many of these old school stores that have been around for 50 years. This is a company that I believe is going to win. I love to see them expanding in dermatology. I'm very curious to see what is their aging offering. This is stuff that I'm going to look at tomorrow. This is a preventative healthcare company, and we can see that we are dealing with all of the issues that people need to deal with, perhaps in their 40s, perhaps in their late 30s, perhaps in their 50s, that is typically not covered by insurance. And this is why this company is so agile. This is why this company is able to pivot really fast into new products, into more products. And I'm very impressed by this company. As you know, if you've been following the channel, I've been adding consistently to HIMSS, and I keep adding. When I look at the numbers, they are absolutely stunning. So we have, that's it, more than 1,040 times 1,000, so more than 1 million subscribers. Some people sign up for multi-month, some people pay by the month. The revenue per subscriber's average is about $55. We can see that it's going up. It's going up. It's a teeny tiny trend, but it's going up. 56 and 55 is higher than 52 and 50. So we like to see that going up. But of course, the number of people signing up is going up like crazy. And if you look, actually, it went up 94% in 2022. 94%. So growth picked up in 2022 relative to 2021, right? So we had major growth in 2019, low base. 2020 and 2021 growth year over year was lower than the 2022 growth, which is going to make the guidance look so silly to us when we look at it, which is why the stock is down, like I said. So this quarter, that's it. They've adjusted EBITDA profitability. Now, keep in mind, this is a company that doesn't pay taxes yet because they are not GAAP profitable and they don't have any debt. They have no debt, so they don't pay interest. So adjusted EBITDA for them is essentially cash flow. So they are cash flow positive at this point, and the trend is just trending in the right direction, which means that the market at some point is going to recognize this company for its cash flows and for its earnings. And by the moment the market recognizes this company for its earnings, that means it will be too late for me to buy the stock. I want to buy the stock when the market dismisses it. And I am thankful for the guidance that we got. Indeed, the guidance, and that's why I'm so curious about the conference call, the CEO guided between 39 and 43% growth year over year in 2023. Now, keep in mind, as I just showed, they grew 94% in 2022, 83% in 2021, and 80% in 2020. Who believes that the guidance is going to be 39 to 43%, especially when they're guiding 73 to 78% year-over-year growth for Q1? They are heavily sandbagging this guidance, and I believe that is why the stock is only up 8%. Frankly, businesses deceleration happen, and sure, there is a law of large numbers, but this is a stark decline. This is more than half. I mean, the company is kind of making fun of the market here by giving this guidance, and I believe the analyst will press the CEO on the call for that. Definitely, they will press, and I look forward to listening to the call that, like I said, is ongoing right now. What I am the most excited about, though, is that we finally have long-term guidance for him. They've provided a 2025, granted, sandbagged guidance of revenue in 2025. Now, I don't know if it's going to be run rate. I'm going to need to listen to the call to know exactly what they mean by that. It's probably run rate revenue in 2025 of 1.2 billion. Now, this is very, and adjusted EBITDA, right, of at least 100 million. So this is going to be very, very useful for me, because now I can have more than 1 year projection on this company. And obviously, you're looking at 1.2 billion, right? And revenue right now is 500, right? So we are looking at their low guidance. We're looking at almost, more than two times revenue. And of course, what does that mean for the stock price if they double revenue, from what it is today? I mean, typically, right, if you apply the same price to sales ratio to today's revenue, and you take that price to sales ratio, which is very, very low for HIMSS, and you apply it to this trajectory number, you are going to get into a situation I believe this stock is well suited to just do very, very, very well. I will be buying more of this stock. I bought some today before the earnings, and I mean, the guidance is heavily sandbagged here. And so I believe there may be an overhang on the stock because of that guidance, and that's an opportunity to accumulate, because growth decelerates, sure, but it doesn't decelerate that fast. And so, especially when you're guiding for Q1, this insane growth still. So anyways, thank you so much for watching. Stay tuned. Tomorrow, I am doing a much longer video covering HIMSS tomorrow. I am listening to the call tonight. Busy today, but thank you so much for watching. Please like, please subscribe, and have a wonderful day. I am very excited about HIMSS. Thank you.